Good morning, guys. It's me, Arslan Ali, and I warmly welcome all of you in another forecast video of the precious metal gold. Guys, taking a look at the precious metal gold, there has been a dramatic dip in the precious metal gold prices as they fell down below 1952 area. If you guys can recall, yesterday we were discussing about the FOMC meeting minutes and not the meeting minutes actually. It was a press conference and the rate decision from the US Federal Reserve. Guys, US Federal Reserve is the central bank of United States, and they typically drive um, a massive volatility in the market, mostly whenever they change their rates, or whenever they form a sentiment about changing their rates or keeping their rates unchanged. There is a movement in the market, and I will explain in this video what kind of movement this has driven, and why we are seeing such a massive sell-off in the precious metal gold. If you guys can recall my previous video, you may remember that we have discussed about the ascending triangle pattern. The um, gold was trading in between an ascending triangle pattern. It was forming higher high and higher low pattern, and eventually the odds of bullish breakout was very much solid. But the thing is, again, I told you that during the US session there can be a trend reversal, or there can be a trend continuation. So we had to wait for the US session to kick in before taking any buy position or a sell position in the market. Well, taking a look at the gold prices right now, you can see that the gold has violated the ascending triangle pattern on the lower side, and typically it has driven around 180 pips in the market, and typically it can drive even more selling in the market if it manages to break below 1938 level today, and the next target level for gold is likely to be 1925. Well, one of the reasons why we had such a sell-off in the market is because of the fact that the Federal Reserve has kept their interest rate on hold. They are not likely to cut their interest rate anymore so far, and the economy is on a growth phase. They may wait for some time to existing interest rate to get absorbed in the market, and also they are confident about the recovery, inflation recovery, GDP recovery. Therefore, since they did not cut their interest rate, although they were facing the deflationary risk, and the labor market figures performed badly. But the previous figure from the labor department was not that as bad as before. So there was a slight improvement in the labor market. So considering the fact that they understand that the economy need the accommodation, but they do not need an additional rate cut so far. Therefore, since they did not cut their interest rate, guys, whenever USA do not cut their interest rate, it means that the money supply is not going to be increased in the market, which means that the money supply is going to be stable. While on the other hand, the market sentiment was there is going to be a interest rate cut, and when interest rate USA will cut the interest rate, loans will become cheaper, people will borrow loan, the supply of money will increase in the market, and as you know, law of supply says whenever there is a increase in the supply of something in the market, their prices fell down. But yesterday something opposite happened. They did not cut their interest rate, which means that the supply of US dollar is not going to be increased in the market. Therefore, the demand for supply remains stable, while the investors starting investing in the US dollar, because there is a term called buy the rumor sell the fact. So they were trying to capture the news, and they started investing in the US dollar. So that is why the stronger US dollar has driven a dramatic sell-off in the market, in the especially in the gold prices. Also because of the fact that the gold and US dollar shares a negative correlation, which means that when dollar gets stronger, gold gets weaker, while when dollar gets weaker, gold gets stronger. So yesterday dollar gets stronger, and there was a bearish breakout in the precious metal gold. And for now we have to keep an eye on 1938 level. We may see a slight bounce off in the market, and then again we can expect a continuation of a selling bias in the market. Looking at the exponential moving averages, you can see that the market is forming candles below exponential moving averages, which are suggesting selling buys. At the same time, the MACD is forming histograms below zero, and there are very solid histograms which are suggesting that the selling bias is still dominant in the market. So let's keep an eye on 1938 level, because below this we will have an opportunity to short the precious metal gold for 1925, while above the closing of candles above this level may help us capture like 40, 50 or even 60 pips in the precious metal gold on the buy side. But again, I will be looking to take a sell position below 1955 once again. So guys, that's all for the precious metal gold today. If you guys like the video, do click on the like button. Also, do not forget to subscribe our YouTube channel, and yeah, also click on the bell icon button, because as soon as I share the next video, you will get notification and you are not going to miss any update from our side. So that's pretty much it, guys. See you guys soon. Bye bye everyone. That's all. Have a very nice weekend. See you guys next week with more forecast videos. Take care, guys. Bye bye.